Morning, Steve Reed in Chicago with the morning grain comments. Well, it's beautiful weather in Chicago today, and the weather should be beautiful over the weekend. As far as the markets are concerned, beans continue its impressive rally into the middle of the harvest. Nearby beans approaching $10, and most people thought that we would actually take out $9 during the harvest. A series of events probably has helped this market rally. Number one was some dry weather in Brazil. Number two, the wet weather in the United States kind of slowing harvest down. Number three, the pipeline getting thin, especially in the east, and some logistic issues allowing for less meal to be moved in that area, and you've got meal basis in the east well over delivery, while in the western part it's actually below the futures market. We've also had some money flow moving from the financial markets into the grains and actually covering shorts positions in the grain, especially in the beans. And finally, yesterday we saw some short covering as we approached options expiration day, with us nearing the $10 strike price. I think a lot of people thought that was not going to happen, and that we actually would be closer to the $9 price level. So we'll see after all this is said and done if the market finds some resistance at current levels. One of the concerns, though, is that about 70, maybe 75% of the harvest should be done by Monday. We'll get more harvest done next week, and historically the markets tend to try to make bottoms once 50% of the crop is harvested. We had increased farmer selling in the U.S. in the beans, also in Brazil in the beans, and that could offer some resistance above the marketplace. Corn and wheat's kind of followers over in the corn. I think the market is also worried about the farmer not selling and moving grain into the pipeline, although basis levels are pretty wide across much of the Midwest as we get into the remainder of harvest. Harvest is expected to be about 40-45% done on Monday. Some people think that because the USDA had so much harvest data from their objective yield fields for the October report, that they may not increase the yield in November as much as the market fears. So we're back into some trading range that we had back in August, between 360 and 380 in the nearby corn, and most people thought that corn by now would be closer to 320. Wheat market supported in part by the rally in grains, but also some concern about quality of wheat in the world, and maybe we might pick up some export demand because of that. 2015 wheat crops, though, especially winter wheat in the United States, is off to a good start, while Russia is off to maybe their worst start because of dryness since 2009. So we'll watch and see what the options expiration does in the beans. We'll watch and see about money flow, and we'll just see how high is high right now in this rally in the grains. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
That's his favorite play. He was at the football game last night. 25 and a quarter. UVA.